Good morning, everybody. We've got a higher trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures up 3 cents at 573 and 3/4. January soybeans up a quarter cent at 1263 and a half. December Chicago wheat up 17 and 3/4 at 840 and 3/4. December Kansas City wheat up 20 and 3/4 cents at 855 and a half. December spring wheat is up 22 and a quarter at 1032 and a half. Those are some fresh 9-year highs in your winter wheat contracts. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, you can see them in my new office here this morning. A little bit of a move over the weekend. Remember, guys, we have a holiday week here, so the markets are closed on Thursday for Thanksgiving. We're going to have a normal close on Wednesday, 1:20 p.m. Central Time for the grains, and then following that normal close on Wednesday, we will reopen Friday morning at 8:30 a.m. Central, so no overnight trade on Thursday. A little bit of concern here regarding Russia, the Ukraine, and tensions there. The U.S. government has shared intelligence with European allies indicating a buildup of Russian troops and artillery preparing for a rapid, large-scale push into Ukraine. Some reports indicate that more than 90,000 Russian troops have amassed around the Ukrainian border. A Ukrainian Defense Intelligence Agency official said that he expects an attack at the end of January or early February. Why is this of concern to us? Well, Russia is the world's largest wheat exporter. Ukraine is the 5th largest wheat exporter. Any sort of disruption of wheat exports in the Black Sea region is a big problem in regard to the global export situation. We've seen stuff like this before. There's been conflict between Russia and the Ukraine in particular and before. But you look at a market like wheat where we've already got tight supplies. We've already got the tightest situation in the U.S. in several years, tightest global supply-demand situation in several years. This is an uncertainty and a potentially friendly input. There's also some corn implications here. I mean, Ukraine is the world's 4th largest corn exporter. So you've got wheat futures, winter wheat futures, your SRW and HRW trading at their best level since December of 2012 this morning. Pretty impressive stuff. And that story is not the only reason, but I think it certainly helps. China's imports of U.S. soybeans declined 77% in October versus the same month last year. They only imported 29 million bushels. They were 125 million in October of 2020. The hurricane is your big issue here. We know that U.S. exports out of the Gulf were displaced or disrupted through basically all of September into a good chunk of October. Also, Brazilian exports were competitive on the market in terms of pricing. In addition to that, you had less than stellar crush margins in China. Total October soybean imports for all destinations were down 41%, but they're only down 5% in terms of Chinese imports for the first 10 months of the year. So I guess that's not a surprise given the hurricane implication. The energy markets are in correction territory. Your nearby January crude oil traded below $75 per barrel overnight for the first time in 5 weeks. That contract peaked close to 84 on October 25th. Heating oil, natural gas, everything has set back here. And you know, this is something that a lot of people wanted to see, is a setback in the crude oil market, a setback in heating oil, a setback in natural gas. Eventually, we'll get our setback at the pump here. We just haven't seen it yet. But this morning, you've got this January WTI floating around $76. It's come off the highs quite a bit. So you should start to see it. I think I started to see prices at the pump ease just a little bit here this week or this past weekend, but I think you should see potentially a little bit more of that. The U.S. dollar index approaches fresh multi-month highs this morning. We're just a hair shy of last week's highs, and you're getting into your getting pretty close to the highest level since summer of 2020. You've got one real obvious or two very obvious factors going on here. So when it comes to the U.S. dollar, this most well-followed version of the index is most heavily weighted toward the euro currency. The euro currency is like 58% of the weighting in this dollar index. In Europe, the European Central Bank has told us that they are not going to hike interest rates anytime soon. They have no interest in that. They think their economy is fragile. They're concerned about COVID. They're concerned about energy prices, all sorts of things. Where here in the United States, we expect the Fed to hike rates sometime in mid to late 2022. So when you've got one country going towards a more kind of aggressive policy with higher rates, and one country continuing to lean on extremely easy money type policy in Europe, the dollar is going to win here in terms of which one is stronger. So the dollar's been strong. And that's typically that's a negative for commodity markets. I don't know if it really has been this time around, to be honest. But certainly something to be aware of. Quick harvest weather update. Weekend rains were confined mostly to, some areas of the eastern Corn Belt and southeast part of the country. If you were in, say, that southeastern part of Illinois, a bunch of Indiana caught some rain. Kentucky into Ohio caught some rain over the weekend. Central Corn Belt, Western Corn Belt, plains from the Canadian border all the way down to Texas were dry. Next 7 days, pretty dry here as well. I mean, you'll see some rains, but these green areas on my map here are less than a quarter inch of rain. So pretty dry here for the next week. I think that things should wrap up pretty quickly in a lot of these areas here, would be my expectation. And we'll see an update from USDA regarding harvest progress this afternoon. We had a cattle on feed report out on Friday. I'd say that it was largely neutral. Cattle on feed were expected about unchanged versus last year. That's about what we got. Placements, 102. We were looking for 102. Marketing's pretty much in line with expectations as well, around 96%. So no big surprises there. Cash cattle were a little bit better last week. In the outside markets, the U.S. dollar is just marginally higher ahead of the cash open, but again, very strong. The stock market's up. The S&P's up 13. The Dow's up 93. Bonds down a little bit. Precious metals are mixed. Crude oil is down 14 cents at 75.09 in the February WTI. Everybody have a great day today. I'll talk to you guys same time tomorrow.